Welcome back to Market on Close. I'm Sam Vardas on the floor of the New York Stock Exchange. TKO Group is today's overlooked stock after UBS raised its price target on shares to $235 from $200. And it also kept a buy rating on the shares. The stock is at an all-time high on Monday, but it has pulled back by about 4% since then. Joining me now is George Tsilis, who is the senior markets correspondent with the news on that and what you need to know about TKO Group. George, hello to you.
Hi, Sam. Yeah, I was quite surprised when I researched this company, but TKO Group is essentially a unified company that brought together the World Wrestling Federation, or WWE, alongside the UFC, essentially mixed martial arts. So they're a combined company now. This merger happened back in 2023. But nonetheless, this company has been growing when it comes down to the sports franchise that it holds. Again, those two major sports franchises. But at the same time, it's not just sports entertainment. This is becoming a media and very much a large live events business, merchandise business. But there's also the aspect of sports betting, which is a very large, as well as video game and merchandise aspects to the business. They reach about 1 billion people globally in 140 countries. And over time, these combined businesses have actually now gone through and secure distribution rights for both live events and television. For instance, the UFC recently signed a 7-year, very lucrative deal with Paramount Skydance to stream UFC fights across Paramount Plus, but also CBS. And if you look at ESPN, which is owned by Disney, they actually have the rights to the WWE's live events. And nonetheless, there's also TV events that are sponsored or streamed through Peacock through the WWE as well. But this company's been growing significantly, not only in price in the last year, but also the deals that they're securing with broadcast distribution partners are becoming very lucrative. And they have effectively a monopoly on these two major sports franchises, which are very popular both domestically and internationally. And I think if you look at UBS's call, they increased their target to 235, as you mentioned, from 200. They still see accretion occurring across multiple merchandise elements of the businesses, whether it comes down to, of course, brand partners like Monster Energy Drink or Anheuser-Busch. The media component of the business has been growing because of these lucrative television and live streaming rights deals with major entertainment giants and, of course, broadcast distribution partners like Paramount, as well as Peacock, which is essentially NBC Studios. But the company's been growing since the acquisition quite aggressively. And I think if you look at some of the growth estimates for TKO, they're still expected to grow their top line sales by about 40% between this year and next, as well as earnings growth, which I looked at was pretty remarkable. Estimated right now for 2025 at $3.30 a share. It's more than double to $6.74 next year. So you're expecting essentially 40% sales growth continually going forward, as well as earnings growth that is nearly double. And so I can see why some of the analysts, including UBS today, as well as Baird, by the way, yesterday, they did increase their price target as well to 250 from 225, maintaining a buy rating.
Yeah, you highlighted some of those very lucrative deals, which is no doubt important in terms of, what's building the case for this sort of stronger conviction here from the analysts. I also saw announcing a $1 billion share repurchase program as well. I'm just wondering, as we look at all these sort of movers and shakers in the media landscape right now, George, what is all this telling you, and who is well positioned right now as far as this whole entertainment space is concerned to really capitalize on, the huge changes that we're seeing right now?
No, I think to answer that question, it's the publishers of content, whether it's original content through Netflix, or if you just think about the WWE and the UFC, these are very unique assets. So their content, their brands are very powerful. They're in the driver's seat. They're able to negotiate very favorable, long-term broadcast or live event deals across the spectrum. You've got Disney Plus, Paramount. You have essentially Peacock, all of which is NBC, ABC, and of course CBS. Three companies, and Netflix. They're all essentially bidding for this content, and that's why I think this is a very unique asset and a very unique investment idea, because they're in the driver's seat and being able to basically command a high premium for their content, and all the competition now for content is being driven by, Paramount and, of course, all these other players that want to have exclusive rights. And so, again, like I said, UFC, which is a component of TKO, did secure a very lucrative exclusive rights deal with Paramount. And so the bidders out there for their content continue to pay up a premium for either live events, but also, again, for streaming services, which are on a recurring basis.
Yep, content is king, as they say in the media world. George, thank you so much for getting us across that really important story to highlight. We are seeing shares in TKO Group are up today.